Ladies and gentlemen, good day and welcome to the Yatsen second quarter 2021 earnings conference call. Today's conference is being recorded. At this time, I would like to turn the conference over to Irene Liu, Head of Strategic Investment and Capital Markets. Please go ahead.
Thank you, operator. Please note the discussion today will contain forward-looking statements relating to the company's future performance and are intended to qualify for the safe harbor from liability as established by the U.S. Private Securities Litigation Reform Act. Such statements are not guarantees of the future performance and are subject to certain risks and uncertainties, assumptions, and other factors. Some of these risks are beyond the company's control and could cause actual results to differ materially from those mentioned in today's press release and this discussion. A general discussion of the risk factors that could affect Yatsen's business and financial results is included in certain filings of the company with the Securities and Exchange Commission. The company does not undertake any obligation to update this forward-looking information except as required by law. During today's call, management will also discuss certain non-GAAP financial measures for comparison purposes only. For definition of non-GAAP financial measures, a reconciliation of GAAP to non-GAAP financial results, please see the earnings release issued earlier today. Joining us today on the call from Yatsen senior management are Mr. Jinfeng Huang, our founder, chairman, and CEO, and Mr. Donghao Yang, our CFO and director. Management will begin with prepared remarks, and the call will conclude with a Q&A session. As a reminder, this conference is being recorded. In addition, a webcast replay of this conference call will be available on Yatsen's investor relations website at ir.yatsenglobal.com. I'll now turn the call over to Mr. Jinfeng Huang. Please go ahead.
Thank you, Irene, and thank you everyone for participating in Yatsen's second quarter 2021 earnings conference call today. So our total net revenues grew 53.5% year-over-year in the second quarter, in line with our guidance. So due to steady contribution from our flagship Perfect Diary brand and better than expected performance of our newly launched and acquired brands. So the number of DTC customers increased by 13.3% year-over-year to 10.2 million. And the average net revenue per DTC customer went up by 17.6% to 117 RMB from 99 RMB during the second quarter of 2020. So this solid result came despite intensifying competition and a rising customer acquisition costs. So even as China's beauty market grew at about 20% overall during the second quarter, growth in the premium segment and in skincare was notably stronger than other market segments. So we believe this market development validates a set of strategy growth initiatives we launched in May to sharpen our growth model. So specifically, we are optimizing internal resources and organization structures to enhance the power of our brands, to facilitate product innovation, capitalize on new growth channels, and optimize cost structures and efficiencies. So this ongoing transformative process will continue into mid-September, even though we have already seen some early signs of success in the latest quarter. So with our proven ability to disrupt the traditional beauty industry using a digitalized native DTC model, we are now building a portfolio of durable, iconic brands supported by consumers' insights and innovation. So we believe these strategic initiatives are essential tools to position us on the path of a high-quality, sustainable growth, particularly as we prepare for a busy season in the lead-up to Singles' Day in the fourth quarter. So during the second quarter, we launched several new products under our flagship brand, such as Lucent Blurring Loose Powder with Smart Lock technology and the Ultralight Purifying Cleansing Oil. So all of these new products featured proprietary technology and received very encouraging user feedback. So despite stiff competition from both international and domestic peers during the June 18th shopping festival, Perfect Diary was one of the top 2 best-selling domestic Chinese color cosmetic brands, selling more than 400,000 RMB lip glosses, among other hero products. So the launch of our higher-priced Slim Hue lipstick Cherry Boss was also a success during the May 20th Chinese Valentine's Day campaign, with sales of more than 100,000 units. This also introduced the Perfect Diary brand to male customers who are buying for their significant others. Heading into the second half of the year, we plan to make a strong push into the face makeup category and premiumize the Perfect Diary brand among our new and existing users. So speaking of brand building, we continue to be recognized by the industry for our achievements. So this quarter, the 2021 Tmall Beauty Awards, known as the Oscar of the beauty industry, named the Perfect Diary the most sought-after brand of the year and Yatsen the fastest growing beauty group in 2021. World Brand Lab recognized Perfect Diary as one of the China's 500 most valuable brands of 2021, in which we are the only color cosmetic brand and the youngest beauty brand on the list. Now, turning to other brands in our portfolio, we continue to optimize return on investment for Little Ondine and Abby's Choice during the second quarter. The newly launched color cosmetic brand, Pink Bear, has seen fast growth since its debut in March 2021. This sensational lip brand sold over more than 500,000 lip glosses during its first June 18th campaign, garnering the award as the fastest growing new cosmetic brand on Tmall in 2021. And as we head into the second half of the year, we will continue to expand Pink Bear into the eye and face makeup categories. We are also excited about our progress in skincare, which has grown to represent more than 20% of our gross sales in the second quarter. Our new innovative skincare products strongly resonated with our consumers. Galactic Pure Brightening Vitamin C Powder quickly sold out following its initial launch on mainland China this April. So after a relatively short period of integration into our platform, Dr. Wu's mainland China sales grew dramatically during the second quarter to become the number one in this category on Tmall. So during the June 18th shopping festival, Dr. Wu sales increased around 700% from the same period last year. Meanwhile, Eve Lom was the number one premium cleanser brand on Tmall during the second quarter, and the sales of its classic cleansing cream products grew by 53% year over year during the June 18th shopping festival on Tmall. So the rapid progress we have made so far clearly shows that there is great growth potential for these brands in the future. We continue to focus on improving ROI on our sales and marketing expenses across the firm. Throughout the June 18th shopping festival, we were able to maintain discipline on pricing and discounts, as well as allocate resources on brands and channels with higher ROI. The end result was a decline in our sales and marketing expenses to 61% of total net revenues based on non-GAAP measures compared to 71% last quarter and 6.7% in the fourth quarter of 2020. So we have also stepped up our investment in R&D, which increased to 2.3% of total net revenues this quarter from 1.4% a year ago. Our increased investment in R&D has already borne fruit, as demonstrated by the smart lock technology that we developed in-house and used in the new translucent blurring loose powder line. So besides launching this innovative product, we also recently announced the establishment of a joint research laboratory with the National Engineering Research Center for Nanomedicine, which was formed under the Huazhong University of Science and Technology to further enhance our R&D capabilities in advanced skincare, particularly nano-based transdermal delivery system for active ingredients. So looking ahead, the lower year-over-year growth rate in Q3, as reflected in our guidance, is largely due to the unusual quarterly seasonality pattern caused by the COVID-19 pandemic last year. So in a typical year, the China online beauty market is characterized by higher sales in Q2 than Q3. As a result of the June 18 promotions across all sales channels. This pattern was disrupted in 2020 due to social distancing and quarantine policies during the COVID-19 pandemic in Q2, followed by relatively stronger sales in Q3 as the market recovered, helped by the pent-up demand from the previous months. So this creates a low base in Q2 and a high base in Q3 for year-on-year comparisons this year. However, if you compare our combined sales in Q2 and Q3 this year, which represent 53.5% and 5 to 10 based on our guidance year-over-year growth rates, respectively, the year-over-year growth is projected to be 26% to 29%. We believe this is a more accurate picture of our growth trend, taking last year's unusual seasonality into account. We expect to have a normal basis of comparison in Q4, and our year-over-year sales growth will resume its normal trajectory. We are confident that successful execution of our strategy growth initiatives, our expanding talent pool, and the ample financial results on our balance sheet position us well to continue playing a leading role in China's evolving beauty market. So thank you, everyone. With that, I will now turn the call over to our CFO, Donghao Yang, to discuss our financial performance.
Thank you, David, and hello, everyone. Before I get started, I would like to clarify that all financial numbers presented today are in renminbi amount, and all percentage changes refer to year-over-year changes unless otherwise noted. Total net revenue for the second quarter of 2021 grew by 53.5% to 1.53 billion RMB from 993.2 million RMB in the prior year period. The growth was primarily attributable to increased contribution from diversified sales channels and newly launched and acquired brands. Gross profit for the second quarter of 2021 increased by 65.1% to approximately 1 billion RMB from 607 million RMB in the prior year period. Gross margin improved by 4.6 percentage points to 65.7% in the second quarter 2021 as compared with 61.1% in the prior year period, on the back of increased sales generated from higher margin brands and products. We have also seen the continuation of the premiumization trend for the Perfect Diary brand in the quarter, enabling us to achieve higher average order value and better margins. Total operating expenses for the second quarter of 2021 increased by 51% to 1.41 billion RMB from 935.3 million RMB in the prior year period. As a percentage of total net revenues, total operating expenses decreased to 92.6% from 94.2% in the prior year period. Fulfillment expenses for the second quarter of 2021 were 118 million RMB as compared with 81.7 million RMB in the prior year period. As a percentage of net revenue, fulfillment expenses decreased to 7.7% from 8.2% in the prior year period, which was primarily attributable to the high base effect of the prior year period, during which logistics costs were high as a result of the COVID-19 pandemic last year. Selling and marketing expenses for the second quarter of 2021 were 72.5 million RMB as compared with 622.5 million RMB in the prior year period. As a percentage of total net revenue, selling and marketing expenses were 63.8% as compared with 62.7% in the prior year period. However, on a non-GAAP basis, which excludes expenses related to share-based compensation and amortization of intangible assets, selling and marketing expenses were 61.4% of total net revenues as compared with 71% in the prior quarter and 62.7% in the same period last year. Such a decrease in the selling and marketing expenses as a percentage of total net revenues was a result of our focus on improving the ROI on our selling and marketing expenses. General and administrative expenses for the second quarter of 2021 were 286.4 million RMB, as compared with 216.8 million RMB in the prior year period. As a percentage of total net revenues, general and administrative expenses for the second quarter of 2021 decreased to 18.8% from 21.8% in the prior year period. The decrease in percentage was primarily due to lower SBC expenses compared to the same period last year. Research and development expenses for the second quarter of 2021 were 35.2 million RMB, as compared with 14.3 million RMB in the prior year period. As a percentage of total net revenues, research and development expenses for the second quarter of 2021 increased to 2.3% from 1.4% in the prior year period. The increase was primarily due to higher personnel costs and share-based compensation expenses as a reflection of our commitment to enhance our R&D capabilities. Loss from operations for the second quarter of 2021 increased by 24.9% to 409.9 million RMB from 328.3 million RMB in the prior year period. Operating loss margin was 26.9% as compared with 33.1% in the prior year period. Non-GAAP loss from operations for the second quarter of 2021 increased by 17.7% to 211.4 million RMB from 179.6 million RMB in the prior year period. Non-GAAP operating loss margin was 13.9% as compared with 18.1% in the prior year period. Net loss for the second quarter of 2021 increased by 21.6% to 391.2 million RMB from 321.7 million RMB in the prior year period. Net loss margin was 25.7% as compared with 32.4% in the prior year period. Non-GAAP net loss from the second quarter of 2021 increased by 12.6% to RMB 194.9 million from 173.1 million. Non-GAAP net loss margin was 12.8% as compared with 17.4% in the prior year period. Net loss attributable to Yatsen's ordinary shareholders per diluted ADS for the second quarter of 2021 decreased to 0.62 RMB from 5.68 RMB in the prior year period. Non-GAAP net loss attributable to Yatsen's ordinary shareholders per diluted ADS for the second quarter of 2021 decreased to 0.31 RMB from 1.28 RMB in the prior year period. As of June 30th, 2021, the company had cash and cash equivalents and restricted cash of 4.11 billion RMB as compared with 5.73 billion RMB as of December 31st, 2020. Looking at our business outlook for the third quarter of 2021, we expect our total net revenues to be between 1.33 billion RMB and 1.39 billion RMB, representing a year-over-year growth rate of approximately 5% to 10%. This forecast reflects our current and preliminary view on the market and operational conditions, which is subject to change. With that, I would now like to open the call to Q&A.
We will now begin.
Operator? Yeah.
We will now begin the question and answer session. To ask a question, you may press star then one on your telephone keypad. If you are using a speakerphone, please pick up your handset before pressing the keys. To withdraw your question, please press star then two. For the benefit of all participants on today's call, if you wish to ask your question to management in Chinese, please immediately repeat your question in English. Once again, that was star then one to ask a question, and at this time we will pause momentarily to assemble our roster. And our first question will come from Dustin Wei of Morgan Stanley. Please go ahead.
Hello, management. Thanks for taking my question. So first question is really regarding the third quarter guidance. So it sounds like it's because the base kind of issue in the third quarter last year that make company sort of provide the very conservative or low guidance. It sounds like it's not because the current COVID outbreak. So that's a little, to me, it's a little confusing. So just appreciate if you can clarify that point. And if we are looking for 5 to 10% sales growth, I think by brand, are we going to assume the Perfect Diary could be declining in third quarter, or could you provide some of the colors like by brand or by channel? So that's the first question regarding the guidance. And the second question is, consequently, we think about the margin or profit for third quarter. If we assuming like 5 to 10% sales growth, does that mean company will also control the variable costs? So we are still continue to see sort of rationalization, ROI, and reduction on net loss ratio, or because of certain operating deleverage effect in the third quarter, we will temporarily in the quarter seeing like bigger loss or bigger loss ratio. And the third point is back to David's prepared remark, talk about the transformation plan. Appreciate if management can provide some of the details about the goal of that transformation, the operational target or financial target, and how long that we will expect that change will be done, and when we are going to see some of the better financial results. That's my three questions. Thank you very much.
Well, thank you so much for the question, Dustin. So first thing, let's discuss a little bit about the guidance. So as I mentioned before, we need to take the Q2 and Q3 combined to look at the growth rate. One of the key reasons is because of the unusual seasonality of last year because of the COVID. So if we look at the Q3 guidance, we cannot provide the accurate breakdown of the by brand, but we still see a very healthy growth trend of Perfect Diary main brand. Because of the ROI adjustment, now we have more brands in skincare category, and for Abby's Choice and Little Ondine, we continue to sharpen the ROI. And then so for that two brands, we are reallocating the resources into the skincare growth. So that's what we see about the Q3 guidance. And then you talk about the COVID impact on Q3. We see some moderate impact on our offline stores because right now it's less than 1/3 of the offline store were impacted by the COVID. So we continue to already chip in the consideration of the impact of the COVID in our estimation of the offline sales. So for the transformation plan, we think we take some initiative to really sharpen our growth model. Because so that means a few things. First, we continue to improve our ROI. So this will be reflecting on the sales and marketing percentage of the total revenue, and also improvement on the bottom line. Second is that right now we are so in the past quarter, we actually allocated internal resources into skincare brands, which means we moved some of the best performers from cosmetic to skincare BU. So that is under the assumption that we think our growth in the color cosmetic category will continue. However, we see a higher, more intense competition in color cosmetics. So right now we're focusing on the growth on Perfect Diary, and also because we already take some very good initiative to grow the skincare brand. We see the momentum on Dr. Wu, Galénic, Eve Lom, and Abby's Choice is moving pretty well. So we'll continue to invest in the skincare's growth.
Thank you, David. If I can just follow up on sort of the from margin or the profit aspect of the questions for third quarter, that should we take the third quarter's margin a little bit abnormal because this low growth, or you think the ROI and the margin kind of improvement will continue despite the sort of a little bit low growth for the third quarter itself?
I think so. If we think about the Q3 and Q4 growth, so normally the Q4's growth comes from the investment of the Q3, because we need to take the repeat purchase rate into consideration. So normally the new user we acquired in Q3 will come back during the Singles' Day promotion. So for Q3, the investments on our flagship brand like Perfect Diary and also the skincare brands will still be high. But somehow we see the trend because of the optimized ROI and lower sales and marketing percentage of revenue. So the bottom line improvement will continue.
Okay. Thank you very much, David. Thank you.
Thank you so much, Dustin.
The next question comes from Christine Cho of Goldman Sachs. Please go ahead.
Thank you so much, David. So I have a quick 3 questions. So just a follow-up on the guidance. I think in understanding the seasonality, if I just simply add the second quarter actual revenue plus kind of your third quarter guidance, it kind of seems to imply around 25 to 30% growth on a YY basis. Is this around the level of normalized growth that we should look for going forward beyond fourth quarter and beyond? That's the first question. Second question is, would you have any update on the offline store expansion? I recall that you had around 100 new opening target for this year, but seems like due to the COVID situation and other kind of factors, so far the store opening has been slower than the target. And lastly, I just wanted to hear some thoughts on kind of the weaker July numbers across the industry. Do you have any thoughts here? Do you think this is more of a pull forward of demand towards June 18th, or is this something, any other factors that we should think about in terms of interpreting July and August numbers? Thank you.
Well, thank you so much. To answer your first question about the looking forward, the guidance on Q4 and also other quarters next year, we think I probably would take the Q1 into consideration as well. So the average growth rate of the Q1 to Q3 will be something that we believe will be a more accurate reflection of our growth looking forward. And going back to your second question about the offline stores. So in Q2 this year, we newly opened around. Irene, can you help to address the second question of the offline store opening?
Yes. So far we have at the end of second quarter we have 273 stores open compared to at the beginning of the year 241. So that's a net increase of 32 stores. We expect to continue to open more stores, but given the repeated COVID situations, the number of stores that we're planning to open may drop a little bit compared to the number that we gave earlier.
For your third question about the overall growth of cosmetic industry in July, we did see like a slower growth versus the previous months, and also it's lower than our expectation. So I believe one of the key reasons behind is what really drives the growth of previous months. So if you look at the since June or last year. So in the past 12 months, beginning last June to this June, so the whole skincare or the whole cosmetic industry growth was mainly driven by skincare and also premium brands growth. So we see that growth trend right now is getting a little bit slowing down, and also so that's why the whole market growth we think is weaker. But looking forward, so if we look at the August data, so we still have the confidence on the color cosmetic growth, because we see there's some newly emerging channels are booming. For example, the Douyin, the live broadcasting, live streaming GMV is growing really fast. So now the company's focus is we need to capture the new growth of the new category entrants and also newly emerging channels like Douyin.
Thank you. That is super clear. Thank you.
Thank you.
The next question comes from Louise Lee of Bank of America Securities. Please go ahead.
Hi, David. Hi, Donghao. Thank you for taking my question. My first question is about the second quarter. So you mentioned about the key driver of the quarterly sales growth is from the channel diversification and the new products. So could you give us some color on the channel diversification? So versus last quarter or versus last quarter. So do we see a further expansion from the sales contribution from outside Taobao and Tmall, particularly from Douyin? So what is rough contribution from Douyin now? And I remember that you mentioned that Douyin, the ROI of Douyin in Q1 is still at the trial period. So do we see any improvement from the ROI from this channel? So this is my first question. My second question is also about the guidance. So it seems like the Q3 guidance is a little bit lower. But if we look at, you just mentioned that normally we see higher sales from Q2 versus Q3. But if we look at the past 2 years, it's not the case. So in this case, how should we look at the Q4 when the base becomes even tougher? So is it the 25 to 30% is a normalized growth? And my third question is, based on what we are doing for the transformation. So it seems like we are prioritizing our net loss control versus the sales growth. If that's the case, thank you.
Thank you, Louise, for your question. So first one about the channel mix. Yes, we are seeing a higher growth rate outside of Tmall in terms of a channel mix. And then so we see a very fast growth of the GMV in Douyin because of the live streaming. So in Q1, yes, we are on a testing period, so the ROI is not that high. In Q2, we significantly improved the ROI. So right now, the growth of Douyin is on a right track, and I believe this will be reflecting on a sustainable growth on revenue and also optimized of our sales and marketing percentage of total revenue. So about the guidance on the Q3, I think I discussed that for Christine's question. If you're taking the Q2 and Q3 growth combined, and then if you're taking Q1 to Q3 combined, we believe the Q1 to Q3 combined will be something that we believe will be more accurate reflection of our growth expectation for quarters moving forward. And then having said that, we believe our performance on Douyin, on the live streaming, there are still some opportunity for us to optimize. So we will continue to devote more efforts to surpass our competitors in Douyin channel.
How about my last question? So, looking forward, so are we prioritizing the net loss control versus sales growth, or so how do we strike a balance here? Thank you.
I think so. We right now we are taking a more sustainable growth strategy. So the key focus is still on growth. But if we look at the what that mean for Yatsen is that we think the value of the growth in coming from the skincare brands and coming from our premium skincare brand is more valuable for the whole group. So that's why we will continue to devote more resources to grow the skincare brands. And then also for our flagship brand, for the Diary, as I mentioned before, previously we did move too fast to reallocate our talent into the skincare BU, and now we think because of the intensifying competition, we need to refocus and also to devote more resources to continue the growth trend of our main brand. So growth will be the key priority of the company. But the reason we see the optimized bottom line is because we have a very high discipline in the ROI in the resource allocation to maintain a higher ROI level, because the higher ROI level is reflecting the whole group. So which means for all our brands we are taking the same bar. So that actually means we need to optimize the Abby's Choice and also Little Ondine's growth model.
Louis, a bit more color on your second question. So you were, I believe you were looking at Q2 versus Q3 back in 2019, and then Q2 and Q3 in 2020 in our business. And you're right. Even back in 2019, our Q3 revenue was actually higher than Q2 by about 11%. And the reason behind that was because back then we were enjoying really high growth speed. So that's why the growth speed, our high growth speed, actually outweighed the seasonality back in 2019. So that's why in 2019 Q3 was 11%. Our revenue was 11% higher than Q2. But if you look at our 2020 last year's number, our Q3 revenue was actually 27% higher than Q2, and that was a reflection of the disruption in the seasonality pattern that we were talking about. So as David has mentioned several times just now, in Q2 last year, we had that social distancing and quarantine policies in almost all of the country, which actually depressed consumer demand and our sales back in Q2. But in Q3, the pent-up demand from the previous Q1 and Q2 were actually released. So that's why we saw a much higher Q3 revenue number last year. And that was the seasonality pattern change that we were talking about. I hope that answers your question.
Got it. Thank you very much. Very clear.
Sure.
The next question comes from Ingrid Zhang of UBS. Please go ahead.
Hi, management. Thanks for taking my question. I have 3 questions. The first is about the brands. I recall that in the last quarter, we commented that Pink Bear is expected to deliver strong growth this year among all the color brands. Would you please update on the sales trend in this past quarter of Pink Bear? And also for the skincare brands, we're glad to see that Dr. Wu sales goals started taking off in the second quarter, but would you share with us our new product launch plans in the second half? And also, when will we expect the growth of like Ifon and Galénic brands to take off like Dr. Wu's? And second question is about the marketing cost. Would you mind to share a bit color about our ROI, maybe by a company level or by channels versus peers? Just want to get a feeling about where we are compared with the industry. And last question is about the organization structure. would you please share with us maybe some color about our resource allocation among different online channels and say social marketing values in terms of personnel's marketing budgets, etc. Many thanks.
Thank you, Ingrid, for the question. So if I remember correctly, so the first question is about our investment plan on the skincare category. So right now we are spending more and more effort to grow our skincare brands. So Dr. Wu is growing really fast, and also we see a very the very fast growth of coming from Pink Bear. So the reason we launched Pink Bear is that when the Perfect Diary is taking a premiumization trend, so the price point of Perfect Diary is moving up. So we see the white space under the Perfect Diary price point. So we need Pink Bear to take the market share when Perfect Diary is moving up. So we see right now, based on the initial sales result of Pink Bear in the past 4 months, it is expecting our expectation, because we think the Pink Bear's growth is very healthy. It's a very high ROI and a very fast growth, and also the brand positioning is very clear. So the brand is strongly resonated with the younger generation of consumers, which means the brand is trading in a lot of new users, of the new entrants into the color category. So I think the Pink Bear right now is on track. So for Pink Bear right now is really focused on the lip gloss category. But for the second half of this year, the brand will be expanding to the eyeshadow category and also some base makeup as well. So we think the fast growing trend of Pink Bear will continue, and then will help us to drive the growth of our value share gaining in the color cosmetics. So for Dr. Wu, so right now we are really focusing on the hero product. But because Dr. Wu has a very strong product lineup architecture, so we think in the Q3 and Q4 we are going to expand into other essence items of Dr. Wu. So the R&D of Dr. Wu is very strong, and the product has been proven in the past decade in the market. So the reason we just choose the first one to be very focused is that we think that one is very competitive in the market, and the product performance is exceeding the consumer's expectation. So we strengthen the brand equity by making the first hero item to become the number one in this subcategory. So in Q2 and in Q3 and Q4, we were expanding the essence line, expanding to the facial mask line, and also other special items as well. So we think the new product launch and expansion plan for Dr. Wu will be very strong based on the existing product lineup. And in the future, we are also devoting the resources in R&D and developing new products, new hero products for Dr. Wu as well. So for a third question about the ROI. So right now, because of the expansion in Douyin, because of live streaming, so the cost structure in Douyin is more CPS based, so which means we pay a fixed cost of the sales. So that is really helping us to improving the ROI. So we think as long as we continue to devote resources into growing the revenue percentage in Douyin, the optimization of the ROI will continue.
Thanks, David. My last question was about the organization structure, our resource allocation among different online channels and social marketing venues in terms of like personnel, marketing budgets, etc. Say how many people we have for the Douyin and Kuaishou channel operation.
I cannot remember the number of the people working in Douyin and Kuaishou right now. But in the past months, we were having the strategy review for our past half year, and we see a demand that we need to allocate more talent into the fast-growing channel and also fast-growing brands. So because of we have a very sufficient talent pool based on our management trainee program, and also we're getting a lot of very experienced people from the industry to join us as well. So we think we have sufficient talent to manage the growth of the different channels. In terms of brand building is one of the key focus for Yatsen Group. So in the past half year, so we have hired very talented people, traditional beauty conglomerates, and then they brought in a lot of experiences in brand building. So we are strengthening the brand equity in Perfect Diary and also our other brands as well. So we think the investment in brand building will continue to take a bigger percentage of our sales and marketing expense.
Many thanks, David.
Thank you.
The next question comes from Casper Shi of CICC. Please go ahead.
Hi, this is Casper from CICC, and thank you for taking my question. And my first question is about the pace of introducing new product or new brand, because we noticed that recently the pace of the introducing new brands is slower than before. So I wonder if the time span for the new product development longer now. And the second question is about the skincare products of the main brand Perfect Diary. So could you share a bit color about the recent sales performance and maybe our future plans of the new brand development, especially in the skincare category? Thank you.
I think in the first half of this year, so we spent more and more effort in developing better products for our existing brands. So initially, we took a better and a fewer strategy to come up with a very innovative and long-lasting performance SKUs. For example, the loose powder we just launched, it takes longer than our traditional products to develop. But the technology and also the smart lock, the proprietary technology, right now is becoming a very strong driver to helping the product to gaining share in the market. So if we look at the loose powder, and then I would believe this one will become a very important milestone of Perfect Diary, because as we all know, the loose powder category is one of the I would say the strategy focus of one of our very important competitor in this market. So which means when we are gaining share in loose powder, it's actually helping us to become more competitive in the market by head-to-head comparison to our main competitor. So you're right that in the first half we are spending more effort to developing the really competitive products. It takes longer time. But for the second half of this year, we will see a higher frequency of launch of new products. That is mainly because ever since like last Q4 and the first 2 quarters this year, we have been preparing for very innovative product launch in the market. So we just launched our makeup remover oil, and also we are launching some other new items as well. So for our lipstick, we are going to have a very breakthrough formula, which we are going to launch right before the Singles Day. And then for our eyeshadow palette, we just launched the 4th eyeshadow palette, which has become the blockbuster of the eyeshadow category this year. And then right before Singles Day, we'll see a lot of new SKU launching among our existing brands, not only Perfect Diary, but also later on Pink Bear and also our skincare brand. So we are confident about our new initiative pipeline in the second half of this year.
Okay.
Can you repeat?
Yeah, the second question is about the skincare products of our main brand, Perfect Diary. So could you give us some details about its sales performance in Q2 and maybe the guidance into Q3 and Q4?
So skincare products of Perfect Diary is similar to Color Lens and also male skincare products, which will be the category expansion of Perfect Diary brand. So for the skincare products we launched in our offline stores, and now we see the percentage of the skincare products lineup as the total revenue of our offline stores has been continuous growing. And based on the initial feedback from our consumers, they believe those like skincare items is actually helping to better apply the makeups. So I believe the product performance has been proven and also be well received by the consumers. And so after a test period, we're expanding the basic skincare product items into other channels as well. So looking forward, we will take in like a higher percentage of the total revenue of Perfect Diary.
Okay, thank you very much about the very detailed explanation. And I have no other question. Thank you.
Thank you.
The next question comes from Kevin Zhang of 86 Research. Please go ahead.
Hi, management, for taking my questions. I have two quick questions. The first one is about the data security. So how does the company evaluate the potential impact from data security related regulation? Because based on our understanding, on the one hand, our customer insight and product development process is really data-driven. On the other hand, the firm usually spend a lot of dollars in targeted marketing. So I was just wondering if the marketing ROI will be diluted post this sort of data-based regulation. This is the first one. The second one is about the management team, because our ex-COO, Vincent, resigned due to health reasons. So what have we done to ensure the stable operation and transition, and how do we reallocate the responsibilities of COO to other members?
Kevin, thank you for your question. The first one about the data security law. So right now, our legal counsel is reviewing the draft legislation on data security. So the preliminary view is that the data security will not impact Yatsen too much, because Yatsen obtains its customer data mainly through the online platforms like Tmall. So the data from Tmall are pretty well protected. So data obtained for our private domain channels are provided voluntarily by consumers. So and also we have very strict data security measures in place to prevent the abuse. So I think overall, our assessment on the data security laws impact on the company is something that we believe will not be very big. The second question related to our co-founders, Vincent's leave. So because of the health issue, he actually left the company around in April. So we started the transition in Q2 already. So originally he's taking a pretty big responsibility of the company's operation, and because we have the second tier management and also my co-founder Jianhua, he's taking the majority part of Vincent's responsibility. So in the past 5 months, we see the operation went quite smooth, and also we are taking the new initiative to sharpen our growth model. So I think the team's morale and also the team's operation efficiency is still in line with our expectation. Although the team has been facing very competitive environment from the industry and also a very disturbing macroeconomic environment, but I believe the team right now has been quite, I would say, confident about the initiative we are taking. We believe we are heading on to the right direction, and then we are sharpening our growth model, and also we see some initial success coming from our brand expansion and also our sales growth in skincare category. So all those are some of the very important milestones we are making. So looking forward, I believe the organization has been moving to the next stage, and then we will continue to work on what we believe will be the right direction, and then we will be long-term focused, and then we will be continue to grow the existing brand portfolios, and then gaining more share in the cosmetic industry.
Thank you, David. That's very helpful. I have no more questions.
Thank you so much.
And that concludes the question and answer session. I would like to turn the conference back over to management for any additional or closing comments.
Thanks, everyone, for joining us today. If you have any further questions, please feel free to contact us at Yatsen directly or TPG Investor Relations. Our contact information for IR in both China and the U.S. can be found on today's press release. Thanks, and have a great day.
The conference is now concluded. Thank you for attending today's presentation, and you may now disconnect.